Hey guys, Stock Saturday, and it's Tariff Bonanza. We've had a very, very volatile time. I have underperformed, unsurprisingly, I suppose, on a week like this. The option side sort of gets hit relatively hard. The sort of gold and silver and crypto side basically are, I would say, just going down with the market, really, because sort of gold is holding up reasonably well. It's had a couple of large down days, but sort of gold still above 3,000. I sort of see that as pretty strong. And crypto is up on the week, or up since, certainly up since Monday, and up since the tariff announcements. So, yeah, I guess they just go down with the market. It's sort of not hugely surprising. Looking at the S&Ps, down 8.21%. Sort of got two large days of sort of 4% down. 5.9% down yesterday. Just sort of kept going and going and going, even into the close. A lot of people saying, portfolio managers aren't wanting to hold stocks or any risk assets sort of over the weekend because you don't know what's coming out on the weekend, and then you can't sell or buy anything, so you just get hit with it as a gap open on Monday. And the Nasdaq has fared pretty much the same. Surprising sort of to see the S&P dropping almost the same as the Nasdaq, 8.43% down. Same sort of two downturn days, 6% yesterday. But yeah, everything is sort of taken a fair knock. You can see here most of the Friday moves. Sort of some a little bit worse than the market, some slightly better. Certainly semiconductors taking quite a hit. Broadcom, TSMC. I did buy some TSMC, Applied Materials, and BlackRock, albeit on Thursday. So I was a day too soon, you might say, before all of this read. But you can't sort of time these things. Interesting to see, even a lot of the stocks that I've sold, I do sort of keep here just to keep an eye on them. And some of those have dropped pretty hard. Glencore dropped very hard. Copper getting hit. Dropped about 40 cents, I think, yesterday, which is rather enormous. Stellantis on sort of auto tariffs and general tariffs, it's under $10 now. Sort of sold that at, I think, $12 or so. So, yeah, fair knock. So looking at some rather outdated news, we are into calendar Q2 now, and I'm still, this came out sort of 4 weeks ago, admittedly, but it is still the 2024 results for Fresnillo. But yeah, so just having a quick look really, because a lot of it's kind of changed quite substantially since then. But yeah, the sort of headlines: 56.3 million ounces of silver produced and 631,000 of gold. Very, very strong, although they expect this to fall slightly. Balance sheet has improved quite a bit from the looks of it. Cash up from 534 million to 1.3 billion, just about. So that's rather good. Debt sort of round about the same. They have senior notes in the current liabilities from the looks of it, 861 million down to 839. So I guess they're going to sort of roll that over, but sort of hopefully be paying quite a bit of this off with the increased cash flow. But it's the outlook I was sort of really interested in, and admittedly they are showing declining production, so I guess that's why they're not getting a huge amount of love. But obviously they're the biggest silver producer in the world. It's going to be difficult to grow significantly, and grades are sort of always getting worse. But yeah, they're showing sort of 50, mid 50s, high 50s million ounces of silver for this year, sort of low 50s for the following 2 years. I mean, I'm relatively happy with 50, to be honest. So, yeah, fairly happy with that. Gold, they sort of have had a bumper year, they're saying. Next year is going to be sort of high 500s, sort of mid 500s in the 2026, and hopefully back up to 600,000 ounces in 27. And sort of all of these are within 5% of each other. And then obviously your lead and zinc, which don't really sort of make up all that much of the profits. But yeah, worth noting that zinc is declining quite a bit before recovering in 27, and lead is just sort of slowly declining in general. So what has been really good is all-in sustaining costs coming down sort of across the board, really. Different amounts in different areas. The sort of main Fresnillo mine declined 4.1%, so that's not a huge amount, but some of these others, 18%, 25%, 34%. Yeah, really, really good to sort of see silver in the high teens, $21, $22. That's not sort of all that bad, although silver has come down below $30, I think, now, with the two large down days on the tariff news. So over $2 days on the downside. Don't see that very often. Certainly don't see two in a row. But yeah, on a consolidated basis, gold down, all-in sustaining cost down from 1760 to 1578. So that's pretty good. A lot of sort of miners want to be getting to the $1,500 range, or below, ideally. And yeah, silver down from $21 to 1852. So quite good. As I say, grades might be getting a little bit worse in the coming years, so these might increase slightly, but it's operating leverage basically. Fresnillo should gain more from gains in the metal prices. And that operating leverage has been sort of shown fairly key in the numbers. You've had increase in the metal prices and a decrease in costs, so that's obviously played a large part of it. But yeah, sort of similar, very similar production to last year. Silver is at 0% change from last year. Gold 3.4% more. But revenue 29% up to 3.5 billion. A slight adjustment for refining and hedging. So adjusted revenue up 26.9%. Gross profit up 147%, and EBITDA 136. And then last year they had some adjustments to make, some write-offs and that sort of thing. They've had a similar amount this time, but it's starting from a much higher EBITDA, of course. Depreciation obviously is an enormous cost on miners, so that does come off. But yeah, from 114 million profit before tax last year to 743 million. That's a hell of a gain. So last year they had quite a big tax refund, so net profit is higher than profit before tax. This year they haven't had that, so tax has come off, and they had some payments that they had to pay to the government, it looks like, and a sort of an adjustment for their silver stream sort of third-party contract. But even so, a net profit of 226 million. It's a little bit lower than last year, but I would tend to say probably look at profit before tax as a better indication. So yeah, 743 million up from 114. Very nice, but I suppose people aren't all that happy with the net profit. They'll be looking at net profit and saying, "Oh, you're making less money than last year," but it's not quite that way. So a couple of Bitcoin miner results as we're the 5th of April. CleanSpark have released their numbers, and sort of relatively as expected, pretty good. 706 Bitcoin mined, 11,869 on the balance sheet. They sold 14.23, so selling a little bit more than they sort of have been in the past, but not a lot of it. Month-end hash rate at 42.4, so it's very nice. On their way to 50, they're saying. And fleet efficiency 17.03, That's very good. Herein obviously at 15, but CleanSpark sort of in a relatively close second. And yeah, they've sort of given updates about Mississippi, Georgia, Wyoming, and Tennessee, all expected to sort of add small amounts. Mississippi and Georgia, 2 exahash between them. Wyoming, 2.5 exahash expected in the current quarter, and Tennessee 4 exahash. But they are keen on their sort of multiple small sites. As far as Riot goes, I suppose things are looking up. Bitcoin produced 533 from last month, sort of being a bit of a low month. I think they did about 500 in January, so yeah, it's a little bit more. They don't sell any, so 19,223 on the balance sheet now. But yeah, hash rate sort of hasn't really moved at all. Deployed hash rate rose 0.1 exahash, so nothing much there. Operating a little bit better, so replacing some of the rigs, I guess, at their original facility. Maybe it is a little bit of more at Corsicana going in, but yeah, 0.9 exahash increase on operating. But the power credits and demand response credits down quite heavily, 0.9 million in total, compared to 2.8 million last year. So that's rose all-in power cost to 3.8 cents, and fleet efficiency stayed exactly the same, 21 exahash. So CleanSpark at 17 and Herein at 15 would be a little bit nicer to get that lower, but they are not expanding. Basically, still just saying they are aggressively looking for an AI deal, basically similar to Core Scientific. The third-party report that they've had done says it's quite suitable. Sort of seems to be stating the obvious. They're sort of noting where it's located. I mean, you can sort of get a map out and do that yourself. Highlighted the size of the land. This isn't sort of groundbreaking insights that they've paid for from the looks of it, but yeah, maybe they're just giving us the highlights. But yeah, they said they are aggressively pursuing a deal with someone. So a bit of economic news kind of got overshadowed by the tariff stuff this week, but there was some notable releases for sure. Nationwide house price index for the UK at 0% month on month, so that's a little bit lower than expected, certainly lower than last month. Preliminary inflation figures out from the EU, sort of lower than expected, 2.4% core inflation and 2.2 on headline. So and slightly lower unemployment rate. So it could sort of potentially be getting more rate cuts on the cards for the European Central Bank. Wednesday got the ADP job number, was quite a bit stronger than last month. Last month was revised up as well, and this month was quite a bit stronger than expected, but I always wait for the establishment survey main number on Friday. Jobless claims sort of looking, continuing jobless claims sort of ticked up quite a bit, although last month's was revised down. Initial claims, though, lower than expected. And the ISM non-manufacturing PMI was quite a bit worse than expected. That's your sort of barometer for the US economy, basically. Non-manufacturing, because they're a services-based economy, sort of financial and general services. So yeah, above 50, so not sort of recession, but quite a bit lower than expected and lower than last month. And then Friday, the non-farm payrolls was surprisingly a lot better than expected. 228,000. Last month's revised down from 151 to 117, but yeah, this month sort of very, very strong, and it was almost all private. So whether that is, some of the onshoring starting to take place, obviously, the tariffs have only just come out, but people have basically known what was going to happen since the election, really. Certainly since Trump came into power. So don't know. Maybe that is part of that. It's not, government jobs. It's private sector at least. Average hourly earnings slightly lower than expected, but nothing too much there. Unemployment rate did tick up to 4.2%, but I suppose they'll say that that's still historically low. You did have Chairman Jerome Powell come out and sort of basically, bash down any talks of sort of emergency rate cuts and that sort of thing. He's obviously says he's not political, but he's rather anti-Trump. So yeah, sort of came out and said everything he could. They'll wait and see on inflation. They're not in a hurry to cut, and yeah, I don't know. We'll see if that changes over the next month. And then on the portfolio side, as I say, the crypto sort of surprisingly performing quite well on the week. CleanSpark was sort of down 1.2% on Friday. Riot down 2.1%. Outperforming the market because Bitcoin was up, I guess. So they'll go down a little with the market, just sort of everything selling off. But it's hard to be selling when crypto is on the up and sort of showing divergent strength, I suppose. Gold and silver are not taking the same approach. They are down quite heavily, and it has been noted that sort of even gold miners are somewhat correlated with the silver price more than the gold price sometimes. With sort of silver being a bit more of an everyman metal, and sort of it's what gets a lot of retail investors bullish, and sort of when they're bullish on the metal, they will go maybe into miners. But obviously, someone like Kerr Mining does more silver mining as well. But you even get sort of someone like Equinox Gold that does no silver at all, somewhat correlated to the silver price. So a little bit strange. Fresnillo took a fair hit, but they obviously close sort of 4:30 in the afternoon on Friday, so they didn't even see all of that loss. I presume they'll be a little down on Monday unless something drastic changes. So yeah, everything took a reasonable knock, certainly for the week, even if Friday was a little better for crypto. Yeah, Pan American and KGHM down quite a bit. KGHM obviously taking a hell of a whack because silver and copper were sort of two of the biggest things down Thursday and Friday. And then, of course, if the stocks are down, then the options get absolutely hammered. These have a time limit, so if the stocks go down, there's less confidence that they will get to any sort of reasonable prices by the time limit. I am sort of nervous a little bit of the time starting to tick down. I think 2/3 of my Equinox are for January, this coming January. So yeah, there's a lot of time, or not a lot of time still to go there. I am considering sort of taking a little bit of I think I can take a tax loss on those and rebuy the January 2027. There isn't a huge amount of difference in price, and that would just sort of give much more time to run on those. 2026 is looking like it'll be a fairly good year for Equinox as well. So yeah, I think there's possibly a good move there. In fact, it would be a tax loss harvesting is pretty good. Obviously, I have missed the chance to do that in this tax year. It would be in next tax year, but I'm hoping next year is going to be a rather large sort of tax gaining year. So knocking a little bit off that would help. Yeah, Kerr Mining sort of took a hell of a hit. That was sort of 12,000, I think, last week. Himax sort of coming down with the rest of the market. That's took quite a knock. Those are all of them January, this coming January. So not that much time to run. Similar with Kerr Mining. Hive are sort of, Hive, Riot, Herein, and CleanSpark are all this coming sort of January and no further, because that was when I saw crypto doing well, and obviously they get absolutely whacked with over the last sort of 2 or 3 months really. But even yesterday, the options were sort of taking a bit of a hit, just sort of people not confident on anything and expecting recession. I think JP Morgan are sort of saying 65% chance of a recession now. I thought I saw somebody early last year saying 100% chance of a recession sort of by June. So obviously that didn't pan out unless they're going to go back and say it was years down the line. But yeah, Riot, Iron and CleanSpark all sort of took a bit of a knock. I'm looking to potentially add to. I'm still liking Iron more than anybody else. Although possibly a little bit more Hive. I still think Hive have decent potential. Looking to sort of grow from 6 exahash to 25 by the end of June. So that's quite a gain. Or no, I think that's by September, isn't it? But a fair amount by June. But yeah, I think Iron sort of growing to 50 exahash by June and potentially a large AI deal on the cards. I think they look pretty good. It's worth noting I had like £40 or something, £50 in a few desktop metal contracts. It was a little punt. I lost sort of I think £200 all in all. But yeah, so they got bought out by another company for below my strike price. So basically, the stock's gone. It never went above my strike price. So they go to zero, and I've just lost. Well, should be I think £202, 100% loss, and that is just options, unfortunately. So yeah, I'll delete them off probably. So we've had the big tariff announcements. We've had China's retaliation, putting 34% tariffs on the US. Trump's sort of weird chart that he held up that isn't actually other countries' tariffs. It's more just the trade deficit, and he's calling it tariffs. A little bit strange. I'm sure there is a large team of people sort of at the Treasury and at the government that could have told him that that's not right. So I just can only assume this was on purpose to try and bring yields down and oil down and everything down before sort of reshoring the jobs that they want and getting investment into the US. So yeah, we'll have to see. I still think stimulus is on the way, even more sort of buoyed by this on the US side, but I would say more importantly from around the world. China sort of wanted a devaluation of the dollar before they could stimulate. That has sort of now happened. So yeah, we'll have to see whether more printer is coming. So leave your thoughts in comments below. How you guys are faring through this sort of Force 10 hurricane, and like and subscribe. See you soon.